Okay, we are literally 2 minutes away from the US market opening on what is being called Black Monday. This is another Black Monday that's pretty much happening. If you look at the rest of the world, which opened a bit earlier, what an absolute bloodbath. Hong Kong down 13.6%. Taiwan down 9.6%, Japan down 9.5%, Italy down 8.4%. It was an absolute market meltdown. I don't even want to talk about crypto, to be honest, because I mean, look at these prices. You got Bitcoin at 76,850. You got Solana was trading under $100. You had ETH trading at $1,400. It's an absolute bloodbath. This is much bigger than crypto. And that's why I don't really want to spend a whole lot of time talking about crypto. What I do want to spend a whole lot of time talking about is this tweet over here where I said, look, despite the fact that everyone's preparing for the worst and everyone's preparing for Black Monday, I have a feeling that the US markets will actually close today in the green. And if I don't close today in the green, then I'm almost certain that tomorrow will be a very strong green day. And I'm going to show you why, because I think I've decoded what's actually going on here. And I'm going to show you the whole story. And that's going to give you some idea of how much longer this is going to go and how much deeper this correction is going to be. So listen, on Black Monday, it's like, what's it? Black Friday, Cyber Monday. On Black Monday, let's see how the markets are going. Are the markets open yet? Not yet. All right, well, let's get the show on the road, guys. All right, any second now. The markets are about to open. I'm just checking the NASDAQ futures down 2.76%. That's a big recovery. Same thing with the S&P 500. If you look at the S&P 500, at one point, the S&P 500 futures were down about 5 or 6%. Now they're down 3.08%. So it's going to be a brutal opening. It looks like the markets have actually just opened, or it feels like the markets have just opened. Let's go look at the daily performance. Yeah, the markets have opened. And it's another red day across the board, an absolute red day across the board on what has been termed Black Monday. Today, I'm going to break down for you what's going on here, why we're having this Black Monday, and why I think that there is an imminent recovery, an imminent green candle. Maybe not today, I think today, but if it doesn't happen today, I do think it'll happen in the next couple of days. So listen, if that sounds good to you, welcome to Banter. Subscribe to the channel if you're not already subscribed. There are 1.16. We are moving up very fast. Thank you to all of you guys that have subscribed. If you're here also and you're just here for the alpha, it's free alpha. All you need to do is obliterate the like button. That gives me the energy to come here every single day, even on days like this Black Monday. Holy shit, what a Black Monday it was. It was pretty interesting yesterday. What happened yesterday was I tweeted before the futures opened, and actually when Bitcoin was at about 83,000, I tweeted this and I said, what'll happen when the futures open? Is it going to be a Black Monday like Jim Cramer predicted? Or are we going to get a Monday rally, like a relief rally? Now, at the time when this happened, you see the results as they are now, but at the time, this was very much 50-50. Obviously, some people saw what happened and went and voted Black Monday. I mean, well done, guys. But at the time, it was very much 50-50. But then we got signs. Remember, this is long before the futures opened. Then we got signs that the market was going to go into a panic mode and into a Black Monday. And the first sign that we got was actually here. This is an hourly chart of Bitcoin. And what you can see is that here at about Sunday 7 yesterday, the markets just started to drop. And every hour they started to drop more and more until eventually Bitcoin got to 74,420. That for me was the sign before the futures opened that we were going to have a Black Monday. And then I tweeted and I said, the market's telling us the futures will open negative today and that it could be a Black Monday. But I'm not so sure. I think that the US could close up or even flat today, and I'm going to show you exactly why. Anyway, the bloodbath continued. It started off with crypto. On crypto, 1.4 billion was liquidated. We then had the S&P 500 futures, and you just look at how brutal the S&P 500 futures were. They went down from here. Actually, let's look at where they closed, which was about here. And hold on, let's just quickly just get a ruler going here. So they went down from here all the way down to there. That was 5.11%. That is a massive correction, especially given where we've come from in the last few days. And then what happened was the rest of the world started to open. And when the rest of the world started to open, holy moly, it was a huge bloodbath. The Chinese stock exchange plunged 13.74%. Circuit breakers were pretty much going off everywhere. And for those of you who don't know what circuit breakers are, that's when the markets automatically stop trading because they're scared or they want to control the panic that's actually happening on the market. So these circuit breakers started to trigger all around the world. Singapore had its single biggest drop in over 16 years. Japan collapsed. Hong Kong 13.6%, Taiwan 10%, Japan 9.5%, Italy 8.4%, Singapore 8%, Sweden 7%. These markets went absolutely crazy. Here is a list of all the markets where circuit breakers were actually implemented in the markets. So it was a really strong correction. I was sitting actually watching the Hang Seng because I think that gives you a feel for the risk markets, the Western appetite for risk markets in the East, because people that don't want to invest in China go and invest actually in Japan. Anyway, now we have the markets open. Let's quickly just take a little bit of a read on what's going on here. You got the S&P down 3.5%. You have the NASDAQ down right now. So S&P down 3.5%. The NQ, the NASDAQ, is down 2.97%. I do think we're going to get an end of day, close of day rally. You have the VIX. The VIX is now at 51. Okay, now just to give an idea, 51 on the VIX. Let's actually take the VIX. VIX is the volatility index. It shows how scared fund managers are and how scared investors are. And I think the only other times we had a little bit of a thing here in August 2024, and I think that was the Japanese cash and carry, reverse cash and carry trade. And then you had COVID, where the VIX went up to 85 and then came back down. So this is a pretty significant correction, and there's a lot of fear out there in the markets. That's pretty much where we are today. But I want to talk a little bit about this correction, why I am a lot more relaxed about this correction than I was about COVID. As you know, I lived through COVID. I was broadcasting. I wasn't broadcasting on this channel through COVID, but I'm much more relaxed than I was during the COVID correction. And there's a very good reason why I'm much more relaxed now than I was during the COVID correction. And the same thing with the 2008 housing bubble collapse. There's a big reason why this correction is different from those corrections. And if you look at the corrections of the NASDAQ, which is, here we go. So this is all the corrections, or the corrections we can think about on the NASDAQ. So you look at Trump's tariff, which has taken us down on the NASDAQ about 22%. Then you've got the COVID crash here, which took us about 30%. Then you've got the US-China trade war down 24%. So if you look at all these corrections pretty much over here, what you realize about the big corrections, or most of the big corrections, including the 2008 financial crisis and the dot-com bubble collapse, is that these corrections were very seldom man-created corrections, right? Like when you think about the COVID crash, that was not something that a government or a bunch of people or advisors engineered, or maybe it was, who knows, maybe the Wuhan lab and whatever else. But if you look at all the other ones, the COVID crash, financial crisis, they were not engineered by governments. They were not engineered by banks for a certain reason. This correction hits different. And the reason why this correction for me hits different is because this is about one person or one government systematically following a process and a script to engineer a correction. And what you can see is that if you look at Howard Lutnick and anybody else that's aligned with Trump, they're all singing off the same hymn sheet. They have engineered this trade war to achieve some kind of end goal. And we're going to talk about what the end goal in a second is.
Is that correct, or is the president considering postponing implementation to negotiate?
There is no postponing. They are definitely going to stay in place for days and weeks. That is sort of obvious. The president needs to reset global trade. Everybody has a trade surplus, and we have a trade deficit. We are paying away our future and our lives.
So that's the narrative. That's the narrative that's happening right now on Wall Street. And we'll talk about that narrative a bit later. I'll put that over there so we can talk about that a bit later today. But this is an engineered situation. Unlike all the other situations where they were pretty much caused by circumstances beyond the control of a single government. Here, Trump literally told us, listen, I know I'm starting a trade war. I am putting tariffs. And I know when I put those tariffs, the stock market is going to have to suffer. He knows it. It's very different from a correction like the 2008 housing bubble, which is one that a lot of people never saw coming. And when it came, caught the entire world by surprise, right? Well, most people by surprise. Most people that were talking about a housing collapse, nobody listened. But it was a very different situation. Here, the world collapsed and no one was prepared for it. Here, during COVID, the world collapsed and no one was prepared for it. .com bubble, the world collapsed and no one was actually prepared for it. This is different. It's almost like, if you want to think about it like this, like in some areas they have fires, right? And they have these contained forest fires where they actually want to burn down a bunch of trees versus a fire that's just rampant and completely out of control. This is a fire that was actually started by a bunch of people who wanted to burn down a whole set of trees. That's pretty much what's going on here. It's very different from a California-style wildfire thing where it came out of the blue and it just went absolutely crazy when no one was expecting it. Here, this is contained. This is controlled by the people that actually set the fire. And that's how you need to think about what's actually going on here, which is why I'm so relaxed. Because these people that have set this controlled fire have an agenda. And they keep being very transparent about what their agenda is. And as much as they tell us that they're not watching the markets, boy, oh boy, you better believe that they are watching the markets. But their agenda is bigger than the markets. Their agenda is to make sure that the Fed cuts rates. And that is why Trump has been going on and on and on about the Fed cutting rates. The Fed must cut rates. He said this earlier today on True Social. Oil prices are down, interest rates are down, the slow-moving Fed should cut rates. Food prices are down, there is no inflation, and a long-time abused USA is bringing in billions of dollars a week from the abusing countries on tariffs that are already in place. This is despite the fact that the biggest abuser of them all, China, whose markets are crashing, just raised tariffs by 34% on top of its long, ridiculously high tariffs. Not acknowledging my warning for abusing countries to retaliate. They've made enough for decades, taking advantage of the good old USA. Our past leaders are to blame for this, allowing this and so much else to happen in our country. Make America great again. I mean, guys, these guys have got a fire under control. That's what it is. They have a fire under control, and they are a controlled burn, as 𝗀𝗵𝗎𝗍 says. It's a controlled burn. So I want to kind of explain to you what's going on, and I want to. Think about this. If Trump's mandate is to reduce rates, and that is what he's trying to do so that he can refinance the US debt, I want to show you what the plan actually is. So if you were tasked with refinancing this debt, $37 trillion worth of debt. So say you were tasked with refinancing $37 trillion worth of debt, and the interest rate was 4.5%, what would you do? Let me show you what Trump's doing, because he's working to a plan, right? The first thing that you need to do as part of the plan is you need to engineer a global market collapse. Now, I use the word global market collapse because that's exactly what's going on here. This is not a US market collapse. Yes, it is a big US market collapse. In fact, if you were engineering this market collapse, you would need to engineer a market collapse that is so serious that everybody is absolutely petrified. And that's exactly what's going on here. The S&P just dropped 10% in 2 days. Just the fourth time since 1952 that this has happened. And I mean, that's absolutely massive. This guy says, Tristan says, of the 5 worst stock market crashes in history, 2 of them are under Trump. 1 was under Bush, 1 of them was under Reagan, and 1 of them was under Hoover. So that's what this guy says. So this guy says, Maine, he says, if tomorrow the S&P, i.e. today, if the S&P falls more than 4% for the 3rd day in a row, it'll be the first time that this happened since the Great Depression. How are we doing right now? It is the 3rd time that it's happened since the Great Depression, because here we are 4.4% down. This is a very, very, very big global market collapse, the likes of which we've seen very, very, very few times. The index wiped out nearly 10 trillion market cap since the February peak. In 2 days, the S&P tumbled 10.5%. Only 1987, 2001, 2008, and March 2020 saw 2 days of declines over 10%. So this is a massive, massive, massive market correction. No matter who you talk to, even the big hedge funds have gotten massive, massive market calls. margin calls. Internationally, as I said to you before, it's not enough to do this locally. You need to do this internationally. And specifically, what you need to do is you need to hurt the emerging market economies. Let me explain to you why. You need to make people so scared of stock markets that they get into such panic mode that they exit all risk. Where is the risk? Well, when there is a bull market and markets are running, people tend to go more towards the emerging markets and the smaller markets to try and look for outsized returns. It's the same as crypto investors. When there's a bull market, we tend to go to altcoins to try and get more outsized returns. In traditional markets, it's exactly the same thing. When markets are running, people get a whole lot more money and they become a lot more risk seeking. They're willing to take a lot more risk because they've got a lot more profits. And what they do is they start going to the emerging markets. They start going to Vietnam, Cambodia, Thailand, China, Brazil, South Africa. What you need to do if you're Trump is you need to engineer a market meltdown that is so big that people move out of these emerging markets and say, oh my God, the world is coming to an end. I need to get out of all my risk. I need to get out of Taiwan, Hong Kong, Japan, Netherlands, South Africa, Portugal, etc., etc. And I need to go into safe haven. What's a safe haven? Well, there's a couple of safe havens in the world, right? The first safe haven in the world is what they call the US T-bill. And the reason why the US T-bill is such a safe haven is because when the world is collapsing, or when you get the perception that there's going to be a world war and a world trade war, then you want to go into the safest assets in the world. Now, what are the safest assets in the world? I guess when you get to that point, to the normal investor, just be in the currency of the world's superpower. Just get into the United States dollar. But you can't sit in the dollar uninvested. So what do? You say, listen, I don't want to participate in this risk market anymore. I don't want to participate in stock markets anymore. I don't want to participate in emerging markets anymore. I'm just going to take my money out. I'm going to put it onto the sidelines. And as you can see, 𝗘𝗵𝗧 actually picked this up as well. He says, the stock market futures are down 15% in 3 days, like we're in a Great Depression. Oil prices are trading at $60. Just look what Trump's policies have done to oil. Look at this. That's the Brent oil chart. People are scared and they're running away and they're saying, look, the world's about to end. There's a trade war. I don't want to be in oil. I don't want to be in markets. I don't want to be in volatility. Just take me back to safety. What is safety? Safety is cash. And the thing with safety being cash is that when people hold cash, they tend to hold the cash of the US, of the global superpower. So it's like you're not going to go into the Zimbabwe dollar as cash or the South African rand as cash, or you don't want that. You want to go into the safest asset that you can be in. Right now, what is the safest asset in the world? Probably still the US dollar. And what is the safest country in the world that will probably continue to pay its debt, even though we don't believe that? The general global investing public believe that it's the United States. So what do? They take their cash and they put their cash into T-bills, and they say to themselves, look, I'm out of risk, and all I want to do is just hold a T-bill and feel safe and just know that I'm going to earn myself an interest rate every single year. Now, the thing with T-bills is that the more people that buy T-bills, the lower the rate to incentivize people to have to buy the T-bills, right? So when no one's buying US Treasury bills, you have to raise the amount of money. And when risk markets are running, and there's a nice alternative, you really have to raise the amount of interest that you pay on the T-bills to get people to buy these T-bills. But when the markets are collapsing, then you kind of say to yourself, hold on a second. You don't really need to incentivize people with high interest rates to buy T-bills, right? Because people are just going to flock there by themselves. And so as you can see, the T-bill rate has gone, or the 2-year T-bill, the yield to incentivize people to buy T-bills has gone down 32% since January. I mean, again, let's just understand what that means. It means that the cost of financing US debt by buying 2-year T-bills has already gone down 32%. And it's not only 2-year debt, It's the 10-year Treasury yield as well. You can see the 10-year Treasury yield has fallen off a cliff. And if we go to January, which is over here when Trump was inaugurated, you can see that the 10-year Treasury yield has gone down about 16%. Okay? That means that the cost of funding US debt has gone down by between 16 and 30%, depending on the duration of the loans that the US is willing to take the debt. So this plan of Trump's is really, really working. Get everyone to panic so much that they exit all risk and they go to safety. And the safety is the US Treasury bill. And as they go to the US Treasury bill, they reduce the interest rate that is required to incentivize them to buy T-bills. And that means that the market, that the interest rates in the market are actually lower than the Fed's interest rates, right? So do you have the interest rate first, the Fed's fund rate? Yeah. I have it. Let me just quickly, here we go. Here we go. So if you look at the Fed's fund rates, and you look at where the Fed's fund rate is, the Fed's fund rate is at 4%, 4.3%. But hold on. The rates in the market are 3.6 on a 2-year and 4% on a 10-year. So what this means is that the Fed is behind the curve. In other words, what this means is that the Fed is behind the market. And that is exactly what Trump is trying to engineer. He's trying to make the Fed realize that the markets are pricing debt different to how the Fed is pricing debt. And therefore, the Fed needs to act really, really, really quickly to reduce the interest rate. And that is the objective achieved from Trump's point of view. And already, if you look at the Fed's emergency rate cut in 2025, it shot up just in the last couple of days. Even though I don't believe we're going to get an emergency rate cut in 2025, I have heard some analysts on CNBC and other platforms say this, but you can
Bob Michael, the global head of fixed income at JP Morgan Asset Management, writing this: both the administration and Federal Reserve are behaving as though the market moves are business as usual. We cannot believe that the Fed will wait until something breaks before responding. Bob joins us now for more. Bob, good evening.
Happy to be here.
GFC.com, the pandemic. Frame this moment. What is this for you and the team?
Well, I was reading Larry Summers earlier, who pointed out that Thursday and Friday were back-to-back the worst market drops, except in 3 other instances: the 87 stock market crash, 2008 the financial crisis, and then 2020 COVID. So this is a historic period, and as you point out, we're down another 5%. I would tell you, in the other 3 instances, the Fed stepped in immediately and cut rates sizably. So I think for now, if you go back to Friday, the Fed can talk tough. They have to be looking at this. I don't know if they can even make it to the May meeting before they start bringing rates down.
At the same time, nothing seems to have broken yet. It doesn't seem like things have gotten disorderly yet, despite the margin calls. And there is a real concern about inflation picking back up. How much can you really reject what Jay Powell said on Friday?
Well, you have to reject something he said over the last few years. Remember, they talked about the long and variable lags. So now they're saying they're going to wait for the accident before they respond and then wait for the long and variable lags to take hold. I don't think so. I think if you step back.
So does the Fed want to be caught behind the curve again? And that's what the market's saying. Now, again, here is the curve. You know, the curve is when you take the yields across a period of time. And if you take the yields, the curve is showing you rates of between 3.6 and 4%. And the Fed is pricing rates at 4.3%. If this continues, the Fed is very, 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 very much behind the curve. And that's exactly what Donald Trump is trying to organize. He's trying to make the Fed panic. Now, again, I saw this today. I don't think that this is what we think it is, but the Fed is having a closed board meeting today. What they're talking about is review and determination by the Fed Board of Governors of the advance and discount rate to be charged by the Federal Reserve to the banks. So let's see what actually comes out of this. Let's see what actually comes out of this. I do believe that there's going to be a strong tug of war between Jerome Powell and Donald Trump. And I don't believe that this is going to happen immediately, but I do believe that Trump's plan is actually working. At the same time, what Donald Trump is doing he's actually scoring amazing points for the United States. He's doing amazing stuff for the United States because he implemented the tariffs. He got the oil price down, which will get inflation down. In fact, if you look at inflation, the inflation numbers are like around 1.5% according to Trueflation. So he's scored some goals. Donald Trump has scored some goals over there. He's reduced the price of oil, which will make investing, which will make investing which will bring down the price of goods and reduce inflation. At the same time, he started negotiating with a lot of countries, and he's getting much better, much favorable trade conditions. Right? A lot of countries didn't want to negotiate, but a lot of them did. And he's getting amazing deals. Just listen to this.
I got a report from the USTR last night that more than 50 countries have reached out to the president to begin a negotiation. But they're doing that because they understand that they bear a lot of the tariff. And so I don't think that you're going to see a big effect on the consumer in the U.S. because I do think that the reason why we have a persistent long-run trade deficit is these people have very inelastic supply. They've been dumping goods into the country in order to create jobs, say, in China.
So you can see that right now that's exactly what's happening, and you can see that a lot of countries. Japanese Prime Minister says he's ready to visit the US and negotiate tariffs with Donald Trump. You've got the EU, which came out today. That's quite a big one. She says we are ready to negotiate with the US on tariffs. Everybody's ready to negotiate all of a sudden. Vietnam sent a letter offering to remove all tariffs on the US with Trump. Taiwan is they're offering to remove all trade barriers with the US and commit to zero tariffs going forward. This after, I mean, you've got the big one is China. So the big one here is China, because this becomes a war with China. And I just think that China is just one of the bigger and longer dominoes to fall. But I think China is going to fall into place just like everybody else is going to fall into place. And that's exactly what's going on. All right. So now, the big question is how long is this going to last? Because it's painful. No matter who you are, this is painful. And I have to say to you that generally when I've seen these things, even though Trump says, look, he's not watching the market, he keeps saying he's not watching the market, we know that he's watching the market. And the reason why we know that Trump is watching the markets is because just listen to how he thinks. Just listen to how he thinks.
For the last 50 years, from the day of my election, the stock market went up in my first term 88%. With NASDAQ going up 155%, more than any president has ever had in any term in office, by far. And I think we're going to blow that away. And maybe the numbers won't show, but I think they're going to show much better than even those numbers. But what you're going to see doing for the last...
So what you can see is that he actually does rate himself based on the stock market numbers. And he knows that you can take, he said it himself, he said, look, you can take short-term pain to get long-term gain. He says, look, sometimes the markets just have to take the medicine. So you take the medicine, you do what needs to be done, you get amazing trade deals, you reduce the interest rates so that the markets can actually start running, right? So that the markets can actually start running. That's exactly what Trump's doing. Just remember that whatever Trump does, whatever he does, he has to make sure that the US economy is back to its strongest levels before the 2026 midterm elections, which is about a year and a half from now. So whatever Trump does, whatever the long-term implications are, he needs to make sure that before this, the economy is very, very, very strong again, because otherwise they risk losing seats in the midterm elections, and that's not something that they want to be doing. So this is absolutely temporary. Now the big question is, will the Fed have to step in here? And the reason why I say that is because if you look at the previous corrections on the NASDAQ, the pain ended when the Fed relented, and that's where we got the old adage, never bet against the Fed, right? So you say never bet against the Fed, meaning that if you want to follow the direction of what the Fed is doing. Over here, we were doing, it was inflation and rate hikes over here, which is why the markets actually came down. And here, the markets actually started to turn, right? This is where the inflation problem started to die down and inflation started to turn. Every time that this has happened, every single time that this has happened, what you found is that the Fed capitulated before the market started to turn. So now the big question is, will the Fed have to capitulate again before the market started to turn. I hope not, because we could be waiting a little bit longer than normal if we're waiting for the Fed. And there could be a lot more pain. Either way, I do know that every time that we've had situations like this, every time that the VIX has gone up, every time that we've had these market corrections, ultimately we've recovered. And I know that Trump is a man working to a plan. He's a man that evaluates himself on the performance of the stock market. Now, do you think that this guy who evaluates himself and his whole net worth on his whole self-worth on the performance of the stock market, do you think that he doesn't have a plan to turn this around? I think when he achieves what we want, we're going to get the biggest run ever, which is going to end in leaving the Trump legacy of the best markets in the world. And so for now, I think that there's going to be this big narrative, but I do think that you need to remember that you need to be in the markets now. Don't get out of the markets now, because 7 of the best days in the market occur within 15 days of the 10 worst days, which means that in the next couple of weeks, we could get a seismic recovery here. And that's what you guys need to be paying attention for. I think it could actually come as soon as today, to be honest. I think not a seismic recovery, but you can see we were already 6% down, and now we're only 1.6% down. And I still maintain, and I've been saying it on my Twitter all day. I've been saying it on my Twitter all day. And last night, before this whole thing, I kept saying markets will actually close green today. Now we're a couple of hours away from the markets closing. We've been as low on the S&P 500 as minus 6%. We're now down 1.7%, and there's a recovery taking place. So let's see if I'm right. If I'm right, great. If I'm not, well, not so good. All right, let's quickly just. I know we promised last week that anybody who signs up to Bitunix, and it's still happening, will get one winner per day for the $5,000. So this is a list of UIDs of people that did apply. Let's just go to number 13, lucky number 13. You get yourself $5,000. You need to write an email to giveaways@cryptobanter.com. You just need to open an account. There's no KYC. And just deposit any amount of money, just so that you actually deposit, even if it's $5, just so that we know it's not a botted account. And then those you can win yourself $5,000. This is, by the way, in the description over here. So you can go to the description over here. Hold on, here it is. Here we go. Description over here. Here it is. Bitunix $5,000 giveaway. Hold on, are we doing Bitfunded? Buy one get one free. It's not supposed to happen today. The buy one get one free. No, it's not supposed to happen. Okay, but if anybody did sign up, we need to honor it. But otherwise, we must stop the buy one, get one free. All right. I will see you guys again tomorrow. Let's see. Let me know on Twitter. Let's wait until market closes, and let's stay in touch on Twitter to see if I was right about the markets closing green. In the meantime, it does feel we're down 1.75%. Bitcoin back at 78,430. I actually don't want to look at the altcoins because it's just too depressing. I shall see you guys again tomorrow. Until then, trade well, my friends.